Let's get a look at the markets now, and Central Valley Ag's Luke Beckman joins me to share his analysis of what's happening in fields around the state and any advice as we head into the latter parts of summer. Luke, always great to see you. Looking at the latest USDA crop progress report for Nebraska, I was struck by just how far ahead both corn and soybeans are compared to where they were at this time last year. So is that a matter of last year's crop just having so much trouble, or is this year's just really good?
Yeah, absolutely. It's a combination of both. Last year we had a lot of troubles with the spring, if you recall, being wet, a lot of prevent plant. But yeah, you've got good to excellent ratings for the U.S. For corn is 14% better this year versus last, and on soybeans 18% better this year versus last year. As you really start to break down the states, Troy, I mean, I'll just look at some yellow corn numbers here for Illinois, 30% better, Iowa 12%, South Dakota 25%, Minnesota 28%, Indiana 29%. The bean numbers are really a similar story. So overall, the crops are much better in pretty much every other state besides Nebraska. Nebraska really had a good crop a year ago, but it's really those other states that are really making up the difference this year.
And Luke, how do you think basis is going to move here as farmers think about cleaning out those bins for the 2020 harvest?
On the soybean side, the processors have really been getting everything they want. We're just in that point now where we're going to start transitioning from old crop to new crop, especially when you look at corn. There's a fair amount of on-farm stocks that need to move, as well as commercial stocks that need to move. And you need to remember that the ethanol industry is still trying to recover from the issues we had this spring and really facing an uncertain demand future. So I really don't expect basis to be exceptional as we clean up this old crop. The question as we get into new crop is going to be, will the dry mill in Columbus fire back up? If it does not, there's certainly some lost demand there in a typical 60-day harvest window that producers really need to be cognizant of. And if that plant doesn't fire back up, there wouldn't be expectations that harvest basis needs to firm. To the contrary, we'd probably expect basis to be softer than what producers see today for that harvest window. That said, we are in a low price environment, Troy. So once harvest gets over, you could certainly make the case that basis will have to do a little bit of work to make sure that corn continues to find its way to the end user.
And I've spoken with analysts before, and they've told me that when we get into July, there's kind of a change in market philosophy, and that's a time when we may see some rallies. Any changes in market philosophy to be aware of as we move into August?
I really think seasonal charts can offer some insight in how the market typically behaves during this time of the year. Both soybeans and corn, more so corn, really struggle from this point in the calendar until Labor Day. Typically, we see corn not have good price performance in the month of August. With everything that we're seeing today, that would certainly be my expectation, that we work on some pre-harvest lows between now and Labor Day. Typically, you do see the corn market rebound from Labor Day into the early throes of harvest. So this year's feeling very similar, Troy. We don't have a lot of crop threats. Carry out as we look into the 2021 balance sheet is inching closer to 3 billion versus 2 billion. So not a lot of reasons for the corn market to rally between now and harvest. Producers need to be mindful of that as they think about cleaning up their old crop sales. Soybeans can give you some better chances as we get into August. That is a weather critical period for crop development, as many people know. So soybeans can give us some better chances, but corn from a seasonal nature does not perform well between now and Labor Day.
Do you have any selling strategies for old and new crop?
As far as strategies go, Troy, really on the old crop corn, really feels like if you can etch $3 cash out of remaining old crop inventories, I think you should get rid of it. There were a lot of government dollars attached to that 1920 crop. We've encouraged producers to calculate that into what their overall cash average would be for that crop. There's really no reason to hold on to that. I think producers need to pitch that and start worrying about new crop. If you really want to have some price participation on that old corn, call options are very cheap. Volatility is very low. So producers could certainly step out there and buy some calls if they really felt like they had to retain some ownership at these low prices. But we're of the mindset that it's time to move away from old crop, especially when you incorporate the government dollars that have been added to the 1920 crop. Soybeans, 9 to 910 is an attractive target for November futures. If we are able to fill those, there's some key technical indicators that line up around 920, 925. Those would be attractive targets to sell remaining old crop bushels and also get some new crop sales executed. We have a very good soybean export program that's going to be taking place really September through January this year. So harvest basis is going to be better than what producers have experienced the last 2 years on soybeans, which is really the market telling those guys they need to just let their soybeans go at harvest. There's not going to be a lot of carry in the futures market for soybeans. So cash sales really make a lot of sense, in this environment for both old and new crop soybeans.